Hello, everyone. This is Noah and John, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply. It's at 72.34. Looks like it's lingering. Show me the chart.
It is lingering, Noah. Normally we like to talk about the increases or decreases in terms of percentage, but I'm just going to go ahead and give you the difference in unit count. We're up by 11 units. So if you're scoring at home, it's really not a change. We're sort of going sideways here.
We are going sideways. I agree with that. Let's wait until that makes a move, and then we'll go and interpret it. Moving on to demand, I'm seeing pending sales came in at the week at 3447. Johnny, show me the chart.
Yeah, that's another increase. That's a 3% increase from the week before. And, one of the things we've been talking about for the last several weeks is the difference between pending sales now versus a year ago, while it's still sort of seasonably applicable. And it's running 36% higher than where it was a year ago. And it's just testament to the strength of the market right now.
Yeah, supply going sideways at a time when we really thought there'd be a lot of stuff coming on the market. It's making me wonder, is there's not enough stuff coming on the market? Like, what's going on? Let's going on to the weeklies right here, John, and maybe that tells us a different story. I'm on the 1 week market ticker, John. I see supply, we came in at 321. That does look down, but show me the chart.
Yeah, it's down like 3% from last week, which is, it's okay. It's sort of within the range of where it should be for the week. But the story's on the yearly side. We're down 6% from where we were a year ago. So supply is definitely running lower than expected.
Yeah, and I think that's only on a week basis, John, because I did a little checking before I came on here. And when I toggled to the 1 month on the ticker, I do see 1,417 units in the last 30 days coming on the market.
Mm-hmm.
And when I looked back at February, you could do this in our contract activity chart. I looked back at February. If we maintain this pace, this is going to be one of the highest volume Februarys we got. Okay. Yep. So when it comes to like, is this normal or not for February? Quite frankly, this is actually a normal pace, if not strong on the supply side. Let's not forget that the most inventory really comes on in the April and the May time period, and we're not there yet. So the fact that demand is keeping up at this pace with the supply, it's quite unbelievable.
It's an excellent point.
Let's look at the 1 week on contract signed, because this is, John, we're close to 300 here. We came in at 297. I love it. Show me the chart.
Yeah, that's 14.5% or so from the week
Amazing.
before. And again, looking at year over year, it's roughly 38% higher than where we were a year ago. And really, the story, as you pointed out, Noah, is not necessarily the drop in supply, because supply is coming on sort of within normal measures, a bit lower, but within normal means. But it's just that demand side is just going gangbusters. And it almost makes me wonder, like, at what point are we going to see the top here in contract signed? And it, almost makes me think that if you're a seller and you're not getting a deal, you should be really, rethinking your strategy at this point.
Yeah, I mean, if something's not selling, we usually say it's either a product problem, a market problem, or a price problem, right? A product problem is totally separate, but market and price, we did have a market problem about 10 months ago, and it's been steadily improving since. And right now, in terms of liquidity, there is not a market problem. The market is liquid and active. So if you're not getting a deal, you got something wrong with your price. Take a look at that. John, when I toggle to 1 month, look at 1,111 contracts signed, over 1,100. Just to put that into perspective, I have to get my phone out of here. Just to put that into perspective here, we don't get this type of, we usually max out at 1,100, 1,200, and that usually doesn't come until April or May.
Yeah.
Right. So the fact that we're getting this in February, this is just an encouraging sign. Either we're at the top now, like you're saying, or we might go to a whole new level.
And this is one of the things I think time is certainly going to tell. I mean, this is either delayed demand that's sort of all hitting at the same time, or it's sort of the start of something new. And I would like to think it's the start of something new, but our job right now is to prepare you agents for today. And so I'm telling you right now, today, the market's hot. I can't tell you about tomorrow, but we're going to take it 1 week at a time here.
The market's hot. All right, John, let's go out of UrbanDigs over here for 1 second. I want to show you some cool things. I decided to look at price action. I want to look at price per square foot over the last 13 years I got here, really, well, 12 years. And I'm looking at price per square foot annual performance. It's an interesting way of looking at this. And we want to see year over year how the market has improved or has gone down based on the year prior. And to do that, I just looked at all of the sales in the calendar year, in this case, price per square foot. And then we did a quick year over year comparison. And this is what the chart looks like, John. And look at this. You see the 2009 credit crisis, and then you see the increase right here to the 2015 peak. You see the deflation that we had from the policy-driven reset for 4 years. And then, of course, you got the COVID right over here. I mean, what do you see when you see a chart like this? Because if I'm a buyer looking at this, you didn't miss anything yet.
No, I think you're exactly right, and it kind of puts the perspective, the conversation we just had about current demand in perspective. And that's it. When I'm looking, especially at this COVID drop right here in 2020, and honestly, I think it's still too early to really put a price on the COVID trades. I think they're gonna still show up in the sales data for the next couple months.
Yeah.
But certainly, if you're a buyer, things look great right now. You have negotiation power, you've got prices where you want them, and you've got low mortgage rates. And if you're a seller, as we are just talking about, you've got buyers coming to you, you've got days on market really dropping low, and you're starting to get a little bit more negotiating power on your own. So all in all, this is a fantastic market for both sides right now.
Yeah, and here's your look at median sale price. This is now median sale price, and it's showing you that same trend. And again, if you look at 2020 right over here, look at, there's only one point in history that is close to it, and that is, of course, 2009. So the train has not left the station, even though the activity is quite bad.
And let me just be honest, Noah, I think that's still entirely surprising. I mean, as we said, I think some trades can still come in, but to think that, coming through the COVID thing and looking, now 10 months later from the peak of COVID, that, sales prices are down 5%, I think would blow a lot of people's, heads open. Like, that's just crazy. You would think people were thinking 20, 30, 40%, and it's not quite that.
But it's also happening when the suburban market's just doing complete disparate things and going berserk. And I wondered if the stock market going berserk and the suburban market going berserk, if that kind of tethered our market and we kind of had a little bit of a floor underneath us. Interesting talk, interesting conversation right there. Let's move on, John, because this final chart I want to show you guys over here, everyone's requesting this one. What a difference a day makes. And what we're looking at is we're looking at closed deals, and we're looking at listing discount from original ask, right? Total negotiability. And then we're looking at how long it took you to sign a deal. And we love this chart because there is a correlation between pricing right and getting close to your asking price. If you sell within 60 days, you're going to get within 5% of the market. If you sell within 2 to 3 months or 3 to 4 months, you're now in that 8% range. Luckily, actually, this has changed, Don. 4 to 5 months is now just under 10. There used to be a big bump there. And now it seems that if you're not 5 months, that's when you're going into the 13% and 16% category if it takes you this long. If you're a seller, you do not want to wait that long to get there. You want to price right and sell quickly.
Yeah, you're exactly right. I mean, listen, the correlation between pricing right and selling quickly really comes down to the pricing right. I mean, there's no substitute for that. And if you're looking at the over 6 months bar and you're seeing 16.1%, that basically says that, that's the median listing discount. So over half are above that. So if you're getting if you're on the market for over 6 months, you should seriously reconsider your price in the tune of around 15%.
Right. It's interesting to say. Hopefully you don't put yourself into that situation. Well, anyway, guys, this is Noah and John. We are both from UrbanDigs. This has been your weekly market report, excuse me. And I just want to reiterate to all of you guys, we do have a wonderful forum right down here. You got questions, we got answers. Please post and ask. And also check out all of these weekly reports right over here. The ones that we referenced today will be over here shortly. Have a great weekend, and we'll catch you next time.